Angie, that's uh, for you. I have a bushel basket of wheat, goddess of grains, that I lay at your feet. And I need some explanations about
Well,
the action in grains, and there isn't a better person to do that. So
well,
uh,
I appreciate that, and I don't know how I'm supposed to follow that up. I hope it is not with song,
okay, well,
because I can't carry a tune in a
I
bucket.
can't help myself sometimes. So anyway, the big, what I want understand, what I don't understand is that
Yeah.
grains pretty much, all of them, they've all come off, and
Mm-hmm.
they've all
Mm-hmm.
come off, and they look very similar to, other, commodities. They
Mm-hmm.
haven't been as weak as crude, but that's another one. And copper came off pretty strongly. And I just don't understand why there's no differentiation between grains. I could understand a relationship between, say, oil and copper
Mm-hmm.
and the economy. But is there demand destruction that people they're
Yeah.
not eating as much, or
Well,
we have a good crop coming in, or is
yeah.
it just that the markets have become so financialized that grains trade like everything else?
Yes to all of those things. I mean, I think all
Oh,
of them kind of play a little bit of a role. You know what I mean? I think one of the things that we started to see, or have started to see, is the shift in trade flows, or the shift in how grain is moving, or where our end user how our end users are sitting, things of that nature. And we've seen folks really work to develop more localized agricultural production practices as well, kind of leaning towards more traditional crops suited for their environment. North Africa and surrounding areas has really increased the production of cassava and a few other crops that they have used in the past, that can actually kind of replace their need for wheat or corn or something of that nature. Now, I'm not saying that they can live forever without it, but, we have seen to where if someone can figure out how to reduce their demand marginally, and lots of folks do it, it makes an impression on the market as a whole. In addition to that, shortly after the Russian invasion into the Ukraine and into Ukraine, and all of the stories that we were looking at there, and the idea that we were never going to see these Black Sea ports reopen, now that we're
right.
seeing these trade flows shift back to where officials in Ukraine think they'll export 4 million metric ton next month, or by October, excuse me, for a monthly pace. And that's barely behind where they were prior to the invasion. And that's not
That's totally
including,
amazing to me because
isn't
yeah,
it?
because I saw news reports of farmers out in their fields wearing flak jackets with
Oh,
potholes from
goodness. Yeah.
munitions, and
Yeah.
fields set on fire. It's amazing that they've made that kind of recovery.
I would never bet against a farmer, and I would never bet against a Ukrainian. So I would never bet against a Ukrainian farmer. You know
Yeah,
what I mean? Like,
wow,
and
that's
and
a
so
really
that's one of those things that I was probably one of the rare folks out there that was like, we're going to figure this out. I think the
okay.
UN's involvement, I think money, those types of things. But now it has become this sort of bullish risk factor, right? Like we're relaxed, we're okay, we're shipping, we're thinking that we're going to see this huge increase in shipment capacity out of Ukraine. And so now it's kind of that 800-pound gorilla in the room, in the sense of one tiny error and the whole entire situation is, a powder keg, so to speak. And so it's just something that we're aware of, but in the short term right now, it's not something we're continuing to be worried about. And so you're kind of seeing that risk premium fade a touch, as folks that need supplies are able to source them, at least at this point, because we just got done, especially with Northern Hemisphere harvest.
Okay, so we're a month and a half away from harvest here in the U.S. Are we bringing in a good crop? Because all summer, all I saw was lack of rain stories. So
Oh
we
yeah.
had, yeah,
Yeah. And that's the $1 million question right now, is what does our overall production look like? We've seen a lot of areas struggle with drought, and there were some concerns over extreme heat. We've had higher lows at night across much of the Western Corn Belt, which tends
yeah,
to influence production maybe even more so than your daily highs. Last year we saw that you could have limited rainfall versus normal and still produce a decent crop. And so right now, folks are kind of the mindset. The USDA came out last week and said the crop's probably around 176 bushels to the acre. That's below normal, but it's still enough to where we feel we have adequate carry out, especially, as we're looking ahead to what kind of global demand there is, what kind of domestic demand there could be, with concerns rising over potential shrinking livestock herd size, especially cattle, because it's just been such a train wreck for them to try to make money with all of these high feed costs and things of that nature. So you're seeing some shrinking demand going forward from a feed standpoint potential. What's going to happen with Chinese relations? Like the increase in Chinese demand, especially in corn, was what really shifted us from a bearish market structure to an extremely bullish one. And so if we see the continuation of a breakdown there and South America is able to step in and produce another large crop, potentially another record crop next year, it just gets a little hairy for us long term.
Okay, so as a chartist, the smallest give back and relative strength, the leader still seems to be the bean market, followed by corn, and wheat actually turned out to be, it's kind of the weak sister, making new correction lows here. Any reason for beans really not giving back much? Compared to corn and wheat?
Yeah, from a global standpoint, overall, we're still exceptionally tight, and La Nina looks to stay in place across the southern hemisphere for at least the first quarter of their growing season.
Go away, little girl.
Yeah,
little
I
baby.
wish she would get a life. Like, it's time to grow up and move along. And so, it's kind of unprecedented to see a third year in a row of an impact or potential impact that La Nina could have. Now, right now, it looks as though the monsoonal moisture will kick in early based on some of the forecasts that people smarter than me, meteorologists smarter than me, are showing. The concern is, could it turn back over dry in October or something of that nature? And so, we all have short memories. And last year we saw about a 25 million metric ton reduction in crop size. So you're looking at a 500 to 750 million bushel reduction. And because of that, we saw a huge shift to the US to kind of cover that hole that the loss in Brazilian production had caused in China. And so we're kind of holding our breath. We need to see Brazil produce a good crop. I just need to kind of stabilize everything going forward. We saw massive new crop export sales this morning in soybeans, with China in as a big buyer. What's most interesting about that is we really didn't see that sort of, we knew that business was happening, but we didn't realize it was happening to that extent. Like, it came in much higher than traders were expecting this morning. So, the big question kind of continues. What does South American production look like? What does Chinese demand production look like until we get what does Chinese demand look like until we get a better answer on both of those things? You're going to see soybeans stay elevated just because of the tightness globally, over the next at least 6 months.
Okay, you think we could see $20 beans?
No.
I just wanted to show some long-term charts,
right?
Because people say, well, the grains have gotten cheap. Well, they've gotten cheap from where you were used to seeing them, but Angie and I remember $2 and $3 corn and $4 wheat, and here you can even see $8 beans in 2020. So prices have still doubled or up 50%.
They're elevated, from a historical standpoint. I said no pretty quickly when you said that. You think we see $20 beans? No. But I think it's going to take it would take a major production issue in Brazil. And so you can't count that out. Again, like I said, the third year of La Nina, you can't say that 145, 150 million metric ton crop is nowhere near in the bin. They haven't even started planting it. So we're going to have to wait and see. Obviously, if they have a major crop failure, there's really no room for the U.S. in our carryout to step up. And so, never say never. But if things, proceed as normal or even just slightly below normal from a production standpoint, we should be okay. And then again, the big question mark becomes Chinese demand and what our relationship looks like with them on trade, moving ahead. And I'd almost bet our relationship with them on trade moving ahead is almost based on what South America is able to produce from a crop
Maybe
standpoint.
we should send Nancy Pelosi over there to ask the question. Can we please improve our trade relations?
We can send her to South America to watch the Brazilian crop size and let us know what that looks like.
So has Fed policy and higher rates come into the whole equation?
Yes.
With
rates? Yeah.
In what way? In what way? How does it affect?
Well, I think, similar to what we saw in 2020, May of 20, right? In my opinion, there's been two like landmark statements from the Fed that has changed direction. The first one was in May of 2020, during the 60 Minutes interview when he was like, listen, we have infinite control. We can do whatever. We have power, blah, blah, blah. In the market, you can look at a chart and basically the next day we shot higher from there. I think after the July meeting, he had kind of hinted at it in June, and after the July meeting, he was like, listen, we're going to do everything it takes to kind of get these prices under control. And so you saw that really kind of everyone back away from the inflation trade from the start of July. I mean, you looked at July and it was a bloodbath. Both seasonals played a role, obviously because corn and soybeans tend to back off after the 4th of July, just because we know more about production. But I do think the Fed kind of saying, listen, we're going to stabilize these prices, resulted in a liquidation from the speculative trader that had been approaching this thing as an inflation trade. I'm not going to say you don't see a return, especially if the Fed, I think, lets their foot off the accelerator too soon.
Yeah.
So I think we're going to watch really closely and see what that looks like, because I don't think you can say we've stuck a fork in inflation. Like, we've had 1 month where we're like, oh, okay, everything's better now. The Fed's going to start cutting rates. And like, that's kind of a dangerous way of looking at it, just simply because we are so elevated still. And so, yeah, it plays a huge role, in my opinion, in the idea of a global recession and what the heck's going on in China from an economic standpoint. All of these things, have repercussions, and it'll be interesting or almost scary to see how it all unfolds here over the next 6 months or so.
Is there really a demand destruction, which means people are going on diets and they're not buying as much food? Is that actually happening?
I think
they
the potential could be there.
Buy the food.
Yeah, I think the potential is there, especially in the poorer nations. People are going to go without, and that's awful. And you would hope that we would see beyond that, but I think that's the case, is that people are see beyond our politics in order to make sure that people who are hungry have access to food, obviously. But I think there's more substitutions taking place. I think there's certain things, there are cuts, potentially, like I said, and they're not massive, but 1-2% around the globe has a big impact on overall demand. So I think people, if they're not going without, they're potentially going longer without purchasing. And I think now that you're seeing, freight rates around the world kind of fall off, and availability from a logistical standpoint kind of come back into play, you're seeing folks also go back more to hand to mouth. So we had this idea that you're going to see people kind of continuously stock up on things. But I think now that we feel a little bit more comfortable about, what the supply chains look like as a whole, you're also just seeing a slowdown. Like, folks aren't buying double what they need over the next 6 months. They're buying what they need over the next 6 months, and we'll think about the 6 months after that in 2 or 3 months. And so I think that kind of changes things a little bit and puts us on our heels, because it's different than what we've been seeing over the last couple of years.
Do you think that the industry would prefer a weaker dollar? Because the dollar has been pretty strong. It's possible that it could be putting in the top here. Would that put a bid under everything tangible, including grains, if the dollar top?
It's possible it would help us with our exports. Right now we're really seeing really poor demand for wheat and corn, and wheat tends to be the most sensitive to how our currency is trading. And so I think that is part of why you're seeing these moves lower. But yeah, I mean, we tend to like to see a weaker dollar when it comes from an export sales standpoint, but with a lot of our reliance on production input, production items, fertilizers, and things of that nature, the stronger dollar has helped mute a little bit of that price increase that we've seen. And so it's kind of 6 in one hand, half dozen in the other to a certain extent, but it does have a major influence, or can have a major influence in price. I tend to argue a weaker dollar has a larger influence than a strong dollar. and price. So if we were to see the dollar fall off, I think that would help put a really strong floor underneath wheat and probably help it, add some value back from these multi-month lows.
Okay, most unexpected event between now and say the end of the year in the grain market, and what do you think that could be?
I think a return to trade war relations, but
Okay.
I would say based on this morning, between China and US,
Okay.
but based on this morning's export sales, if that does happen, they're stocking up first. So we're talking late in the year. So I'm probably not going to be in by the deadline if that's the case.
Oh, okay. And let me ask you, and I'll wrap it. It's kind of somber, but we're celebrating that Ukraine can get their grain out through the port. But is there a lot of chatter about what's happening in Ukraine around that nuclear power plant? Because if that blew, that would make a shipping blockade
Oh, that
look
wouldn't
like a
even
party.
matter. Yeah, exactly. I mean, honestly, if the shipping would no there, yeah. I think
I
I
know
think
it
it's one
makes
of
me
those
speechless
things,
too.
right? Yeah, yeah. It's rare to make me speechless, but you just managed to do it. But I think
Yeah.
it's one of those things where we just kind of know it's a risk in the back of our mind, but we're just going to choose to ignore it to a certain
Yeah.
extent, simply because it's one of those things to where, whatever
You don't even
happens
want
kind of
to
happens.
consider. Yeah.
Yeah. I don't know how you would even
That would
get
be a
prepared for it.
disaster for the whole world. Really.
Yeah, it would be an epic black swan. I mean, and I don't
Yeah.
know in what way. Like it would just be devastating all around. And that's the worst part about the world in which we live now. You're just kind of like, well, I guess it could happen.
Yeah, it seems like everything can happen. I hope things are happening for you with your new company. Are
Yes.
you looking for people to follow you and get in touch with you?
If
Or
they want to, they can. I love interacting with folks and talking markets as much as I can. So if you want to, you can reach out. Our website there has a contact us form. You can go ahead and grab that, or there's a phone number on there. And then on Twitter, I'm Goddess of Grain. I'll go ahead and throw that on the chat there, and you can find me there. Or I just started doing TikTok, like morning market updates and things.
Oh yeah,
Which is
how's the response on that? People like TikTok because it's
yeah,
short attention spans. Yeah,
it's good for
okay.
me. I've enjoyed it. It's been interesting, but I feel weird being like, I'm on TikTok now, but you can also find me there.
Okay, well, Angie, Goddess of Grains, I've brought my sacrifice for everyone to have a good crop, that you oversee that we have a good crop here in the U.S. and that both farmers and consumers benefit and have overflow. May your bushels run over.
I appreciate it. Thank you so much for having me.
All right, Angie. Nice talking to you.
Nice talking to you.
Angie Setzer, everybody. You could follow her on Twitter at Goddess of Grain. And if you want to know about the grain markets, Angie knows them like the back of her hand. So that's going to be a wrap for us today here in F.A.C.E. And you could join the team in about 20 minutes for the morning edge. I'll see you tomorrow. We're wrapping it up with Trader Victor Sperando. Adios, everyone. And don't just count your ears of corn, count your blessings. And we'll see everyone tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.